Welcome to the Trading Lounge and the indices report, starting with the S&P 500 here. We're still looking for a new high here, one more new high, as you know. And one of the interesting things here, I guess, is that, well, just a particular point is that this move down through here as a corrective wave in three waves here, then the market is expected to take that high out here. Now it's done that, but it hasn't done that on the Dow Jones. So we're still expecting new highs on the Dow as well. Just drilling in here a little bit. As you know, we've taken a very conservative view of the move to the upside in terms of target area, and also in terms of the price action as well. We're looking at an ending diagonal triangle, and in an ending diagonal triangle, we're looking at each structure being three waves to the upside. It's a little bit tricky to see it here. We may be able to see it in the tech stocks, in the Nasdaq here. So we can see here, for instance, that we've got this clear, like three-wave price action. Now, one of these lows here might be a little bit tricky to work out, but that doesn't matter because we've got that three-wave price action, and we'll take these highs out, which we have. But each little structure in here is in three waves. This little one here, and then also this one here as well. And this is what we're sort of expecting here as well. But at the same time, we're looking for 1, 2, 3, 4, and 5 here. So when we get this new high here, we really need to be careful at that stage, because that's where it can finish its uptrend from that point. And to support that, if we have a look at the US notes, this is just the 8-hour chart here, and we were looking for 5 waves up through to here. And we had this first move here as in 3 waves. So we knew that we were in for a corrective pattern, and it was possible that we just had this ABC and moved up here, but I always felt it was a little bit too small. And then as it started to unfold here, thought, well, we may have a triangle, but this is the 61.8 retracement, 50 at the top, 61 at the bottom, and yeah, so that's where, and we're sort of there now. So there possibly can be another wave to the downside here, but we should sort of take note that this is setting up to reverse. So the 4-hour chart here is also a little bit tricky to see. I think that we may have the 1 and the 2 here. That's pretty clear, and then 1 and 2 and 3 and 4 and 5 here for the third wave, back for the fourth, and down for the fifth. Wave 2 was quite simple, so we'd expect wave 4 to be complex, and it's not, and that's why I was thinking that it's possible to have that one more, nice. That's very clear, isn't it? This one in here is not very clear, so that's what I was sort of thinking. But as it stands at the moment, just on the 2-hour chart, we've got that 1 and 2, and I've got 1, 2, 1, 2, 3, 4, 5 for the third, the fourth, and the fifth, and the fourth here. But this realistically, there can be one more. Let's just see. It doesn't really matter. We haven't seen any sort of strong push to the upside yet to confirm that the market is moving up from here, and but it is setting up. So there will be strength after this, and that will obviously place pressure on stock. In regards back to the S&P 500 here, we're looking at this first move up here as an impulsive wave, 5 waves. So that will give us another 5 waves over here. This is just about completed here, and as you'd expect on the old highs, you'd expect it to be, the bids to be hit, to be sold off rather, and the sort of 61.8 retracement levels back around this number here, just roughly, and that's what we'd be looking at. So it would leave us with our normal, mainly Wednesday and Thursday. Tuesday we start to see a bit of profit taking, but certainly Wednesday and Thursday are our corrective swing days in this matter. So so hopefully out of it, like, once again, we'll get our Friday, Monday, and a bit of Tuesday on the upswing here, because we'd also be looking for 5 waves here as well. And this is the same for the Dow Jones as well. And with the Dow Jones here, as I point out with the S&P 500, don't worry about the count here, but it's just an alternative count, a much more bullish count, this one. But it's possible, but I don't want to go there yet. But I just wanted to point out that this move here in 3 waves here is corrective. So we should see that high get taken out here. So it's still a fair, but that's sort of up close, closer to the 18,300 here. So yeah, anyway, let's see how we go with that. But on the intraday here, once again, we're looking at an impulse wave to the upside here, and and then a corrective move. The 61.8% is actually below the 18,000 there, just eyeballing it, so to speak. But yeah, so once again, the old highs causing resistance and then being sold back here, and then looking for a move to the upside there. It'll be interesting to see this upside here, because, you know, we've got this labeled as, you know, well, on the S&P, an A wave and a B wave and a C wave, but I've always held the triangle pattern here with this particular market because it fits all right. You know, there's no, you know, I haven't been proved otherwise yet. So, and it's not a matter of being wrong or right. It's you know, it's the market that dictates what's what. But also too here with the triangle pattern would be looking for 5 waves up. So not just within this structure, but 1 here and 2 here and 3 here and 4 and 5 here. So that's going to be interesting to see as well. In this particular structure here, where there's got a couple of counts on this one, but I was looking for, well, this can all be counted differently. The different people have different counts here. So that the main point is that we don't have any overlapping wave structures as yet. We're getting some here, and and we're probably close to the end of the trend here in terms of looking at this here. That's like wave 1 here, wave 2. This is wave 3 here, but it's rather small, and 4 and 5. So we'll see, but expect, as normal, expect a corrective pattern. You know, at the 18,100, the Dow Jones works perfectly in terms of trading it from each 100 points is what this market's all about, really. So yeah, just getting from, you know, waiting for a setup at a particular level, getting to the next 100, even this one here to this 100 here, that type of thing. So it's quite good for that. So a nice setup. Well, let's just see what we get here first. In terms of a setup here, what we can see here, just on the 2-minute chart, and just while we're here, but, you know, we've got this structure here, really, which is 5 waves in here. So then there's the corrective move, and then we'd look for another 5, which we've got in here as well. So then we would be looking for, and we may or may not get it, depending, but because we've got this 3-wave correction, that means we can start looking for a setup in the next session. And the next session here would be, first of all, having support on 18,100, and also building in the trade here. If you're going from this 100 to the next 100, you would build in on 18.1 and then 10, 20 and 30. And if you get support on 30, tested support, then you know you're going higher from that stage, and you would look to add on 50 and then onto 72 here, and then you start exiting before the 18.2 there. That's the normal process to the upside. And markets tend to move quite quickly between the numbers 3 and 5 in both directions, and also 5 and 8, but I always use 72 as more dominant than 80 in terms of trading. So between these two numbers, it's fast between those numbers. They're the best trading numbers. You can build a trade into the long side through group 1 here, 10, 20 and 30, but it's better not to trade down into group 1 here. You trade normally into the top of group 1, the 3 there. Well, you can also go 33 as well, which is even better, because the orders will start to build up at 1, 2 and 3, because shorting through here gets too choppy. That's the point. It just bounces around too much. we can accommodate that, but there you go. Anyway, enough rambling. Onto the DAX here. We're looking for a low yesterday. Possibly got it in play here now, but I would really want to see this market sitting on support of, well, we've got 11.5 here, which is the medium level here, but that's not the one that actually interests me at the moment. It would be 11,650. If we get tested support on that, then we can confirm that we're moving to the upside here, because there is a small chance that the leg down here hasn't completed in terms of 5 waves, so we'd be looking for 1 here, 2 here, 3 here, 4 here. It's moved a bit higher, and 5 here. Anyway, I think that we've got the low into play here, but that 11,650, 65 number is the one that we want as support here. And we also obviously want to see, an impulse wave to the upside. But anyway, wave 4 here, if this is the low, then we should be taking out these highs here. So that's, well, it's interesting. And how to go about that? Well, first of all, is confirmation. And confirmation would be seeing a nice 5-wave structure here, and also support on that 11,650 there. So just drilling in here a little bit. This is 11,650 here. And, the obvious path here would be, well, 1 and 2 and 3, back for 4 here, up for 5, then the A, the B and the C here, and then probably getting support here. It might be a bit stronger than that, but we do want to see that sort of unfold here a little bit. I mean, what sort of bugs us here a little bit is that this little move up through here, this first leg up here, can be counted as corrective in 3 waves. It may not be, but that's how it sort of sits. So, you kind of wonder a little bit. And also, too, you would sort of think of the possibilities of it. Well, let's just check on something here while we're here. See, that's the 38.2 retracement level to here, and yes, it is above that, but we need to note that, because it is possible that that it's a very slim chance, but this being down for 1 here and across for 2 here, and then all of this, the 3rd wave here, so 1, 2, 3, 4, 5 to here, then an A and a B and a C wave, like somewhere into here, and then failing from here and moving down here. So that's possible. So that's why we just need to allow the market to toy with this 11,650 number, and eventually finding support on it is the catalyst to the upside there. So the FTSE is also on the futures market that we look at. I'm not there yet, but just doing a bit of housework here, but the cash market is rather sluggish, but the futures market has moved up a little bit. So, well, not a little bit, but a fair whack here. So we're looking here for the A wave, the B wave, and the C wave here, and looking for this, because it's corrective, we're looking for this top to be taken out, and our target up at 7.2 area there. So that's what we're sort of looking for there. But the move up here on the cash market is not above 7,000 yet. So it's very sluggish as such. I'm just going to go to another chart just to check to see where that price ended up. Yeah, it's at 6,990 roughly, or even below that, 6,985. It's up for the day, but it's, 6,985, so it's just in here somewhere. So it's the cash market's not above the 7,000. The futures market is normally it's called the futures, so it's in the future. It normally leads, so it is a positive sign. It's just not, the cash market's not sitting on 7,000 just yet, and that's something that you would want to be looking for over the next few sessions to give confidence in any long trade to the upside. Once again, as I mentioned, here we're looking for a move up into the 7.2 here. In terms of the wave count here as well, a little bit like the DAX really, it don't really have this resolved in a clear way in my mind. I've pulled into here and I can see that this move here is corrective, and when I go in on the intraday here, I can see 1, 2, 3, 4, 5 here, but it doesn't take out the low here. On the cash market, it looks like this is like wave 1 and wave 2 here. So there's a variety of different counts here. It's not resolved properly here, so it makes it a little bit flimsy on what we're building this structure with here. But that said, from this structure here, if we look for 5 waves up through to here, and then a decent correction, so this in line with the other markets, so moving up and then having a nice correction back into the 7,000, which would be the shallow part of the 50-60% retracement level. Can we just drill in here a little bit further? Okay, so so from this low here, I can see we've got, I think we went over this yesterday, 1 and 2 to here. A little bit tricky here, but 1, 2, 3, 4, 5 for the third, the fourth, the fifth here, and then the A wave, the B wave, and the C wave. So the 50 and 60% retracement level is a little bit lower in this area through here. I would be wrong in this if 70, 50, the midpoint became the support. So if that became the tested support, you don't want to miss the run up. So you need to be long on that, but not trading just above it, but breakout's important, retest is more important. The ASX 200, okey-doke. So, well, as you know, we've got wave 1 and 2 and nice third wave here. We've been working ourselves through this particular pattern through here. On the futures market here, this high here is the high on the cash market. That's not the high here. We are seeing banks being sold off quite strongly. They appear to be in bearish mode. This can certainly, we've got 2 counts here. So wave 3, wave 4 over to here, and 5 waves up for wave 5 here. So we've either got a top in play on the cash market and the banks on this high here. Yeah, this one here. Or we've got a move up through to here. As I've mentioned earlier in this scenario, that we'll have 2 outcomes. We'll either have the 5 waves up here, or from this sharp move down here, we'll have a retest to the 5,900, which is the 61.8 retracement level. So we're either going to be going like this. We'll either be going basically 1, 2, 3, 4, 5, that sort of thing, or we'll be going the A wave, the B wave, the C wave here, and failing from here. Both are very valid. The material sector is holding up the market. That said, so the retail's there as well, I guess, but the material sector has a point in its structure where it can fail. So BHP up into the 34 area, maybe a tad higher, I'm not quite sure, but up there finishes a particular structure that it can turn and work lower from that point. So we've got that in mind. So yeah, and the banking sector is good enough to call bearish. So it's certainly, there's enough sort of sentiment out there for this to move up roughly around this 59 area and then down. So look, basically, if the 59 becomes the tested support, so once again, not so much trading above it, but testing it and developing a support on it, then we know that we're going to be going to the upside there. So we've got this danger area at the 5.9 there that we need to work through, and we've been talking about this a lot, so I'm just going to drill in a little bit further through here now. So yeah, getting to the 5.9 here, from these lows here, we can count 1, 2, 3, 4, 5 here. So we can have wave 1 or the A wave, and then wave 2 and the B wave here, and then we're looking for 5 waves up here for wave C. And as a corrective rally move, as an A and a B and a C wave here, it can fail from here and move down, and that's fine too. We just need to be, get ourselves net short in equities at that point for this market. Otherwise we need to hold on to our longs and because we're net long and work through this. So there's going to be some, there's going to be well, it's just going to be tricky a little bit, because in both cases, we're looking for the same wave structure to the upside, which is 1 and 2, 5 waves in the third wave, the fourth wave and the fifth wave. And in both cases, it's going to react at the 5-9 anyway. And then we're going to need like a session or two to try to figure out what's going to happen from that point. Normally, when we're working with a whole large number here, we would look to group 2 below, and we would also be looking for group 1 above. So don't need that one. So 10, 20 and 30 there. Now that's normally the range that we can work with. And if either of these become the support or the resistance here, if 5, 9, 30 becomes the support, then we're going up from that point. If this area here becomes the resistance, then we'll be going down from this point. So it is in this space here that we need just to allow the market to do its thing. We need to be patient, and then as it unfolds and reveals itself, then we will be making our move at that point on our equities. And obviously we're doing the same thing trading this market in terms of straight up indices, so to speak. So anyway, from this yesterday we were looking for an A and a B and a C, then up for 1 and back for 2. That's good. And then this is all the third wave here. So we've got wave 1 and 2, and well, or even that's part of that here. So the main point for day traders is that 58.50 is the midpoint. We've got support there. This is a corrective pattern here, so we'll be moving higher, taking this high out, taking this high out, that high out, making new highs. In group 2 here, which is 65.72 and the 80, expect a 3-wave correction here and then a move up to here. So I'd definitely be looking to exit here once you can count the completion of the impulse wave here in wave 5 here. There'll also be 5 waves in there, and it will be very much like wave 1 here. So the extensions in wave 3, so wave 1 and wave 5 will be much the same. Alrighty, I think that's pretty much covers it in a general sense. So thanks for tuning in. Cheers.